Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And we're on the road tonight in Minnesota. I did finally make it here, getting ready for SilverFest, which will be coming your way in just a few days. And it is Labor Day Monday, so I'd like to wish a happy holiday to everybody out there. Hope you're all doing well. Might be a little bit of a video on the quicker side tonight, but a few interesting things happening in the last couple of days, and wanted to let you know. Before we get started, however, would like to mention this video tonight is brought to you by Bluestone Resources. And you may remember that we had Jack Lundeen of Bluestone on about 2 or 3 months ago, as he talked about how they're advancing their high-grade Cerro Blanco gold project. And for anyone who, whether you heard that one or not, they're actually doing a webinar this Thursday, September 10th, where you can find out more about what Jack is doing. Again, he comes from the Lundeen family. Certainly a track record of success in what they've done. They'll talk more about their gold project, which is in Guatemala, 100% owned, and a good chance if you have any questions, would like to find out more. And by all means, when I do these videos, I don't want anybody ever to feel pressured into buying anything or investing in anything. But hopefully a good chance to get some more information and find out, because if you're looking for leverage on gold, that is one way of doing it. So thank you, Bluestone, and September 10th. I'll have the link for that in the description below. And now on to today's topic, where I know if you're a familiar visitor of the show, you're seeing that headline, you might be thinking, gee, what happened to Chris who went to Minnesota? Now he thinks the stock market is actually wildly undervalued. Well, let us dig in. And here you can see we have the cover of the CNBC. There's a lot of chatter on Wall Street today about a tech bubble. Here's what they're saying. Kind of interesting to hear even CNBC use the word bubble in what's going on. Again, let me move my head here. We'll pull up the Tesla chart, which is truly stunning. I guess it's not quite as much fun to look at now that they did that reverse split, but even we'll pull up the 1 year, because before you had the split, Tesla basically did a 10x in the past year. Last September, it was $225. So let's see, adjusted, that's 46 bucks. Now it's at 418. So the thing has gone up 10x. We could ask Kranzler on his weekly appearance this week. I think they may have had one quarter where they had a gap accounting profit, but I know there's often a lot of rebates and special charges. And again, I don't claim to be a Tesla expert, but the point that Tesla grew 10 times more valuable over the past year, which includes Corona, it seems a little unusual to me. And I think the fact that this all started happening right when the Fed started their swap lines before the Corona money printing had a lot to do with it. Yet something that I think will come up quite a bit in the coming years. And as always, I'm not suggesting to say follow what I say or that it has to be this way yet. Just something that, perhaps phrased differently, I think can be helpful to keep in mind as you watch what's happening, because certainly on a fundamental basis, my opinion is that Tesla is wildly overvalued. Yet, if you look at it, I'm big into conditional probabilities these days. Trading shop I worked at, big at statistics and framing things in the correct context, because normally I would say, yeah, the stock market is wildly overvalued due to Federal Reserve money printing. Yet, here's the thing, is that given the way the world looks today on, what do we have, September 7th, 2020, yeah, I think it's wildly overvalued. But the big caveat to that is that in what can anybody point to that would show any indication that the Fed is ever going to do anything aside from just print this thing into oblivion, which means that stocks like not just Tesla or Apple but really any of these stocks while they may lose value, and I would say they will lose value in terms of purchasing power or the stuff that you can actually buy, I'm of the school of thought that we'll probably never see them come down in nominal terms. I mean, let's say, the tech bubble started popping. I mean, what is the Fed going to say then? I mean, everything would be based on them at some point saying, wait a second, printing money is insane, which is not in their playbook. But let's just take a little review over the last couple months. Here we have March 15th, Federal Reserve cuts rates to zero and launches massive $700 billion quantitative easing program. On the Ides of March, which I continue to find cute, maybe we'll ask Jean-Claude of Beyond Mystic if he has any thoughts on this. I am of the school of thought. I don't know if your Ouija board actually works, but I do believe that the folks that plan a lot of these things, again, the movie Eyes Wide Shut, my understanding is somewhat representative of the type of thing that happens at the upper levels of some of these places. Again, factor that in as you will. And certainly I can understand if that seems hard to believe to anyone 10 or 15 years ago. I would not have believed some of the things I've heard myself, but anyway, I'll leave you to have your own conclusions on that. But that was March 15th. Then 8 days later, Fed announces unlimited QE, sets up several new lending programs. I mean, they're buying basically anything out there. Then you have June 10th, Fed sees interest rates staying near zero through 2022. Of course, followed up, that wasn't enough. We found out about inflation targeting, a clever little way of just saying that they are going to create more money, print more money. So I guess the takeaway is, at least to me, if governments haven't thought it's time to start cutting spending yet, and central banks haven't seen evidence of quantitative easing being as silly as the premise that banks melt down the economy and we're going to give the same banks the ability to run a printing press, create a fresh batch of hundreds, maybe get Bernanke to throw it out of the helicopter. If that sounds absolutely insane, I would agree with you. Yet here we are. It doesn't seem, I don't know, my guess is the Fed knows exactly how insane that is. I lean toward the side, this seems like a broad day bank robbery rather than a confused Keynesian mishap. Plus you have the election. So it's hard for me to see the scenario in which these guys ever stop printing money, because essentially to stop printing money is at least one way of looking at it is fessing up to the crime, saying this didn't work. This is a colossal catastrophe. And certainly that does not seem to be in our politician or central banker playbook, their politician or central banker playbook. I don't want to be a part of it. I'm guessing you don't either. So, where does that leave us? Well, yes, I think that on a fundamental basis, the stock market is overvalued. But given that if you assume they're going to continue printing no matter what, then these numbers are going to get bigger. Now, underlying that is my belief that, all right, maybe when we get to a slice of pizza being $50, stock market will be whatever it is. I think gold and silver will wildly outperform. And at some point, at least based on any known economic laws of supply and demand that I can figure, in terms of your purchasing power, I would imagine that if you just hold stocks like Tesla, the number of slices of pizza that you can buy will go down. Now, is that going to be a straight line? I would never claim anything quite that silly. I mean, I guess I'm glad I have a show and can finished one book. I mean, the stuff that I expect to happen over the next couple of years it's partly unfortunate because I know a lot of people are really being affected by some of these policies, and certainly my heart goes out to them. And, as best I know is to be a good person, continue to share what I see is the best way I know how to make any impact of that. But that aside, I mean, just from, if you can take a step back and pretend as if you're watching a movie, and just from the sheer historical fascination of what's happening. Going to be interesting times. So, of course, I will continue to cover it for you here. And you can hit that subscribe button and the notification bell to stay posted. So either case, that in short or maybe medium or long, tangentially winded, is why, well, I don't think the fundamentally undervalued, these numbers are going to get bigger unless the Fed starts raising interest rates, unwinding QE, which I don't see happening. So fortunately, at some point, we're going to see the silver price get substantially bigger, in my own opinion. Here you see it's about 26.80, 26.90-ish. Again, we are on the holiday weekend today. It's Monday night as I'm recording. So will be fun to follow. Again, keep in mind, SilverFest coming up this weekend. If you have not yet signed up, there you go, right on the front of arcadiaeconomics.com, where we are going to be talking about all sorts of good silvery things and anyway, how the silver market will react. So you can sign up there. Here are a couple other links that I thought were worthwhile to pull up, although temporarily the Wall Street Journal is down, although if you Google it, you can get the gist. Here, U.S. debt set to exceed the size of the economy next year. U.S. debt has reached its highest level compared to the size of the economy since World War II and is projected to exceed it next year. Sure, if you were not using the government numbers, it would have already exceeded it a long time ago. And then, but what is just incredible to me that no one in the mainstream seems to notice, I know you guys are all aware of it, but maybe you can tell a friend that, wait a second, I thought Jerome Powell said we're in the midst of the greatest economic disaster ever, and yet the stock markets are setting all-time highs. Does that make any sense? On one hand, no. On another hand, yes, because that is the effect of massive amounts of money printing. And why the stock, you know, certainly as someone who appreciates financial history and studying the markets, it's like we don't have any idea what anything is really worth. When you distort things through what the Fed is doing with the money supply this greatly, that creates asset bubbles, distorts all sorts of pricing mechanisms. Then you have the banks, I mean, they get fined almost by the day for manipulating one market after another. So it's interesting in how little, and then here you have, given the world we have today, the stock market is at an all-time high. One day, a couple of months ago, Powell was still saying the economy was great, and now it's weak. I would say take away the printed money and you'll get a very clear answer, which I don't expect they'll ever do. Although, fortunately, that brings us back into a rather interesting kind of anniversary we crossed last night, because here the red line, that's September 6th of 2011, a night I remember quite clearly. Gold had crossed $1,900. The U.S. had been downgraded. I still wonder if the dollar Ponzi scheme was close to being more widely recognized back then. And I'm in a hotel in San Diego, and I just remember quite clearly because you get this whopper headline: Swiss National Bank sets floor for franc. Which basically, at the time, the Swiss, you know, the dollar was on the rocks, and they were looking at the Swiss as the last supposed safe haven. Europeans had already been QEing up more euros. So basically here, the Swiss franc, supposedly the last safe haven, now they're going to print so it doesn't rise too much faster than the euro. And I remember after seeing that, I'm thinking, geez, is gold about to break through 2,000? You can see, I'm moving this thing. I don't know if you can see the date there. This email came in Tuesday, September 6th at 3:18 a.m. So right, interestingly, right there, and it was incredible because I remember flipping over to check the price and see, I wonder if gold's going to spike. Yet there you see it go from about 1910, gets pummeled $30 right there. then trades lower for a while before the hammer dropped again the following day. And here in a situation where you would have expected gold to be soaring, shockingly, the price was lower. I'm sure you could look up the volume on that chart. And that's definitely normal because I know most large institutional trading shops, they really have to sell their gold. They do it in the middle of the night like that when the liquidity is thinnest. Obviously, I'm being sarcastic there. I would have gotten thrown out of my shop that day. Anyway, we are on September 7th. There's been no fireworks this weekend just yet, but this was certainly, this and April 30th of 2011 in the silver market, two things that, as you know, I've probably spent far too much time thinking about, yet they're so relevant to everything that's going on, in my opinion. So anyway, hard to imagine. Wow, 9 years ago. A lot happened since then, although gold back above this level. So we'll keep an eye on that for you. Speaking of things to keep an eye on, here is the silver ETFs, SLV and the others. You can see this number a couple of months or so ago. That was the 4-week additions, was over 100 million ounces. So things have slowed down a bit since then. Still metal going in. Last week, 2.9 million ounces. But again, last 1, 2, 3, 4, 5, 6 weeks, metal still coming in, slowing down a little bit. Let's take a look over at the Comex. Before we get to silver there, again, keeping an eye on palladium. You see a big number, 322 for palladium relative to the previous months here. And I want to check in with David Jensen soon, who our resident palladium expert. I know he's keeping an eye on these, finding these pretty big. And as he's been on the show over the past couple of years, a few other people have wondered, could palladium possibly be what sparks some sort of Comex failure, which we continue to hear about. So we'll keep an eye on that. Here you see the Comex silver futures. So it doesn't look like we're going to have a new record this month, but still that 8,800 contracts. Keep in mind, I mean, I don't think May was actually a record, but it was a big one, and we're close to matching that number. I would imagine that we will go over that by a fair amount this month. So again, not record territory for anyone who was wondering about September deliveries. Now, how close? I don't know. It could be the next contract is the breaking point for all we know. Although I know I got a lot of messages about the interview with Kieran Van Hest, I believe, and was talking about some signs he was seeing of Comex failure in his research. You know, he went on Rob Keentz's show last week. He did contact me, so I think we will have him on soon. Really wanted to give another listen to what he was saying, review Rob's interview as well, and see if we can come up with some intelligent questions to ask him. But I do think we'll be having him on for everyone who asked. And again, thanks for keeping me posted. It's nice that I get some advance notification on these things. So thank you all. Again, lastly, here is the SilverFest schedule, which is going to start this Friday. Keep in mind, yes, there's the silver, you know, this and that, JP Morgan, blah, blah, blah. But really, more than hearing me talk about silver, I mean, if there's really one overriding purpose is to help you find and connect with other people. We're going to have some of the silver companies there as well. I believe Jim Willie is going to have his own booth where if you want to talk with Jim, all the questions you've always ever wanted to ask Jim Willie, this could be your chance. And let's see, I don't know if we've updated him on the schedule yet, but it starts off with a meet and greet on Friday, just hanging out on a Friday night rather than going out somewhere locally. If you want to hang out online, I think you'll meet a lot of people that you really connect with. Before we watch some trading places, then have a bit of a late night silver party, and the whole schedule. Let's see if I can figure out how to. Ah, there we go. Yes, so you can click. So if you come here, if you click on this part, you get the schedule. If you click on the register link, you saw what I just showing. When do you sell your silver? If you don't hold it, you don't own it. True or false? And much, much more. So again, you can sign up. So this part for the schedule, this part to register, and then you can take it in there. And I am looking forward to interacting with a lot of people, a lot of the fun people who watch the show are in the live chats every night, and really looking forward to meeting a lot of you. And I think we have a fun event planned. So I'll look forward to seeing you there. And with that said, we're going to wrap up for tonight. I hope you're having a great holiday weekend. And again, as I mentioned in the beginning, tonight's video is sponsored by Bluestone Resources. That is going to have that live call on Thursday. Link in the description field below. And if you'd like to know a little bit more about them, what they're up to, find out if that's right for you, well, my interview with Jack Lundeen of Bluestone is coming your way now.